Hi guys, welcome to the new episode of Yotewo podcast. And today we have two new guests. So we have Amrit from Mercia and we have James from Box Dogs.
Hey guys.
Thanks so much for joining, guys. So I'll give a bit of context on like how I came up with this episode and like why you guys are here together. So I was thinking to do something. You know, there is a lot of talk about how industrial tech is changing with AI and everything. So I was thinking, who should I bring for this episode? And you guys are building something in supply chain, which is super industrial, traditional space. And you and Amrit are investing in those kind of things.
I am.
So we'll discuss about this area, sort of what are the risks, how is the investment climate there. But maybe you guys want to start with sort of, introduction about yourself and what you guys are working on.
Do you want to go first?
Yeah, far away. So my name is James. I'm the co-founder and CTO at a company called Box Dogs, headquartered here in London, and we have an operation out in Italy as well. At Box Dogs, we track the untracked across supply chains. So all your physical assets, products and goods from stores to retail locations and between warehouses. Very B2B back-end supply chain space. Been around for the last 5 years. One major pivot in the business to where we are today. And the company's we're now in that kind of commercial phase of just growing our customers' platform, getting them on board and scaling the business.
Amazing.
Yeah, guys. Hi, guys. I'm Amrit. I'm an investor at Mercia Ventures. My background is pretty unconventional to like VC. I was an engineer for many years, so I worked in like pharma, FMCG, and the energy industry, looking at how can we bring in like cool new technologies into industry. Did it for like a good couple of years, wanted to jump on the commercial side of things and became a VC about 5 years ago. Joined a fund called Simba Capital, was there for sort of 2.5 years, doing mostly enterprise software. But if I'm honest, I joined stuff that was more technical and kind of a bit more deep tech side. And then for the last 2.5 years, been at Mercia, which is a UK focused fund, writing checks up to 10 million. But I'm a techie at heart. I'm going to do deep tech stuff. So reindustrialization is my bag and I'm like super bullish on it for the next 10 years.
Cool, amazing. So I think like obviously the kind of AI and the whole technology thing in industry is like an elephant in the room now. Everyone kind of speaks about it and sees it. So I was recently looking at the sort of the news about it, and I saw that the CEO of Nvidia mentioned that we're now going through kind of this stage in humanity and history that a lot of it's kind of like a new industrial revolution kind of thing, and they mentioned that it essentially applies to sort of energy and like supply chain, like sort of very traditional old-fashioned industries, and I actually see it even in our field. Like even though stuffing is like a couple 100 years old industry, like at least in the UK, but it's also, even though it's like human resource related, it's still very much being affected by AI and all this stuff. So it would be great to hear your thoughts, guys, on what do you think about this whole trend? Do you see it as well? You guys are building a supply chain, so it's also it's also part of the experience. So maybe if you can share your thoughts on that.
Sure. Should I go first?
Yeah, you far away, yeah.
Give the macro view and then you can go from the grounds up. So I guess I'm betting on it for the next 10, 15 years. So obviously I'm going to be bullish on it.
Nice.
I don't think people, when we think about AI and that journey, I don't think people realize the extent of how incredible it's been over the last period of time and how much it's speeding things up.
Yeah.
And I think people have sort of containerized it, but realized over time and time again, the boundaries have been pushed. And I think AI itself has been a sort of a deep tech revolution. If you give something a load of cash, invest in a load of R&D, you can achieve quite phenomenal things.
Yeah.
I mean, if you look at the CEO of DeepMind and what he's done with AlphaFold, right? Yeah. Like we can now predict 90% of proteins about it, which we just thought was like impossible.
Yeah.
I think the next bit on why I think AI and industrial tech is like hugely important is like second, the geopolitical landscape. So if we think about like society since the sort of 20th century, we've had kind of multiple forms of labor arbitrage in how we think about how the kind of capitalist world works. And it's sort of about, we've been offshoring because we've had geopolitical stability over the last period where we've like, okay, instead of building in here, why don't we send it to a country which has, I'd say, a lower minimum wage than it does in the UK. We can drop costs, improve bottom line for it. And we've seen that over a long period of time. And that's create like a really complicated supply chain, system. And I guess it's probably what the problem you're sort of solving about it. But I think as we're seeing with the geopolitical landscape where GDP growth hasn't really been seen, there's been a cause of frustration for it. We're seeing fractures from it. We're seeing the US now focusing a lot more on its own self. There's a need for sovereignty about it, and therefore the need for onshoring it from that perspective. And it's sort of like, well, if the minimum wage is still so much higher in how we think about and how we live in society in the UK, how can we still compete on a global stage for it? And it's sort of like, well, let's use the IP kind of powerhouse that we have and become incredibly more efficient with running those factories so that we can be able to provide stuff at cost competitive viewpoint as well.
Yeah.
And then I think the third point of it is like, I think we were talking about like technologies earlier today, right? Like AI is one of those things that it's so quickly to see like the time to value and like the value prop of it.
Yeah.
That I think it's so much easier for people to understand and willingness to take a risk and adopt it.
Yeah.
Like
I agree.
the industries you've been talking about, like people were talking about blockchain, and we were talking about that, and we can go down a rabbit hole there, but maybe not. But like when you see the AI, we're like, okay, we've done that task. We knew it costs, I don't know, 15 man hours. We can now do it in like 30 minutes.
Yeah.
And that value prop is so clear that I think in these industries where people, they just get it so much more and willing to take a bet on that technology.
Yeah.
I agree.
Yeah, I mean, from our perspective, we're on the kind of the complete reverse end. We're building tools from the ground up for women and men on the ground, using these tools to make their lives more efficient. I think, we work in supply chain logistics, very much in the kind of the B2B space, not even kind of to consumer. And supply chains, they actually do move at a glacial pace. They're very slow. They're very slow to adapt. They're very slow to adopt. But the use case for AI in our space is just there's a million use cases. Yeah. I mean, being a CTO of the business, I have so much fun because the amount of places that we can apply it to across the product is fantastic.
Yeah.
I think to give you some like real world use cases of how we apply AI to our customers. From a driver's perspective, it's everything from training models on to understanding QR codes, barcodes. How can you get a driver to scan enough assets quickly enough so they can get back on the road, back to do their job? So you have the time savings from their perspective, just from that human level of I want to go home quicker. Yeah. Then you've got the business decisions, right? We track the data across users, vans, assets, locations, warehouses. There's tons of data there. Our customers are wearing high-vis jackets. They're usually in a cold warehouse. They're running from meeting to meeting, and they're always on the ground. How can I deliver you the insights to make an action in your business to save cost or time? And that's where you can apply, the data learning, the predictive models on top of our data set to actually give them that insight as quickly as possible. And so, where we're focusing on is, like you say, from an operational perspective, it's getting the staff back into their job as quickly as possible. They shouldn't be scanning. They should just be dropping off stuff to their end consumer. And from an operator's perspective, is how can I make decisions and actually really understand my operation better? Rather than just like, I don't want to be looking at a dashboard all day. I need a quick report, and I need to be able to give it to the the head of operations or the CFO quickly to make a decision. And so there's a plethora of places that AI can be deployed.
Supply chains is such a great place for AI because like the operations directors or managers in those businesses, like you just don't realize that every second counts. Like people think about how their warehouse design structure is done so that they do minimal number of steps because like every minute and second counts. And
it compounds.
And it compounds like hugely, right? And so when we think about like AI in that point, like people go, okay, if I can shave it off there and there and there, makes a lot of sense for it.
Yeah.
Totally. Yeah, I think the other thing as well, I mean, and actually it's a hot topic. I was at an event yesterday, the Leaders in the Logistics event up in Leicester. Nice. And there's it was a board discussion with some of the largest 3PLs as well. And one of the things that they were talking about was also around cybersecurity. So the major news article of last year was M&S were shut down for 3 months, going fully manual. So it's not only just the operational savings day to day, but also it's the protection level. So 3 months of the M&S not working cost them hundreds of millions, if not billions, right? And there's a very big saving to have there, all through cybersecurity prevention. And so from both ends of day to day, but also the boring stuff, which we don't like to spend lots of time on, which is cybersecurity, the stuff that you can't see, but is really mission critical to these businesses as well.
Yeah, totally.
I mean, it's like mythos, right? Yeah. I mean, marketing is like phenomenal on point on that, but whether, I mean, there's been studies on that, but like to that point, it's worrying on both ends of the spectrum, right? Yeah. But in some ways, it's great because you can identify zero defects. but then also like crap stuff can be hacked really quickly.
Really quickly. And I think that's also it. Like, you know, in terms of supply chains and logistics companies, these businesses have been around for tens of years, if not hundreds, right?
Exactly.
Their software is outdated, it's old. They usually have internal IT teams, which are very slow to adopt, you know, with large HR policies, meaning you can't adapt to new policies quickly. And first and foremost, most businesses in supply chain and logistics, they are predominantly operators moving things from A to B. They're not software businesses first. And so they're not always at the forefront of this stuff. So, you know, we sell into these businesses. How can we help them do that? Whether it's tools or back-end features.
Yeah, exactly.
Yeah,
go ahead.
I was going to say, like, particularly in this like sector industry space, like these are often really big companies where it's all about like consensus decision making.
Yeah.
As opposed to be like venture or like startup, which is more contrarian decision making.
Yeah.
And that's like a real big shift. And I think where a lot of startups struggle and challenge with, and it's about how do you mitigate those cyber risks? But like, I think what's quite exciting is like the cost curves for like AI have like dramatically decreased. People knew it was a problem and already like Microsoft adopting it as quickly as possible. Whether people still want to use cloud, but you've now got on-prem models which can actually operate, you know, on stack, and so therefore you don't actually. Therefore, the cybersecurity risks are becoming less and less.
Yeah.
In one kind of vector, but obviously other vectors, it's becoming, you know, more threatening.
Totally. Yeah. I was just about to ask on that side, like, has the use of AI and sort of it coming to the market accelerated like the conviction to clients? Like, is it easier to like sell to them now? Is it easier to convince them to use those solutions?
It's actually really funny. I was at an event about 6 months ago. It's our wholesalers food event, and one of the largest wholesalers in the UK was there. Their commercial director was there. And he brings up his kind of 12-month roadmap slides to the audience. And at the end, he had a slide on AI. And his argument to the audience was, I have no clue how to even adopt AI into my business, but I know that I need to talk about it. Right. which was a really interesting take, because of like, you know, in one aspect, yeah, you're right. You need to adopt, you need to change, and adapt. But a lot of these businesses, they need a holding hand. They don't know how to adopt. They don't know how to deploy these things, you know. And even getting a large, like you said, these large businesses, even just to adopt Copilot internally can take months and months and months. So, you know, there is definitely a hype that people go, I'm excited to try this new tool because it's AI and apparently it solves all my problems. But then it's also about explaining to customers at the end of the day, this is meant to save you. It's just a tool. It's to save you time. It's to save you costs, and it's to make your life easier.
Yeah, that's cool. Where'd you? Yeah, go ahead.
I was to say, like, I know, like, as a VC, I pontificate about too many things. Like,
that's cool.
Like, generally, I mean, like, you know, while we're on the yacht in like Monaco and whatnot, talking about that dream. But I think like the way I thought about it is, I don't think AI would have had the success it did if it wasn't for like ChatGPT moment and how it went D2C.
True.
Yeah.
True.
Like, I think if it was like not a D2C product and it was like B2B, I think the adoption curves would have been a lot slower.
Yes.
And I think because it went widespread during COVID and during that period, everyone got to try with it. And I think that's made it really much more easier in terms of, I'd say B2B, I think, you know, like SME is where we're seeing so much more. Like, it was crazy. We met a company the other day and it was doing kind of AI for like CNC machine.
Yeah.
Their like sales cycles are 5 days.
Yeah.
Like it's grown from like 0 to like 8 million ARR like super quickly.
Okay.
And like, I get it there, but then I also think enterprise adoption of AI, that's still where the bottleneck is.
Yeah.
And to your point on like cybersecurity, procurement, these businesses have no idea. I mean, to your point, people still need to move to cloud.
Yes.
That's still an issue.
That's a really interesting take, because we've come across this business in the UK. They're a, I won't say what industry they're in, but they're a major wholesaler of goods across the UK. And under UK law, you have to keep manifests for 7 years for certain types of controlled drug products, and everything's on paper. So they have a warehouse full of just paper receipts, just because legally they have to keep them, and they're not even digital. So they're spending hundreds of thousands of pounds a year on warehouse rent just for this kind of stuff. And so, like you say, there is this lag of some of these large businesses that go, I know I should change. I don't know how to. I'm actually scared to, because everything seems to work fine. But then you see the rise of the InPost and Amazon, who come in with their software first businesses, wiping them clean.
Yeah, true. Where do you guys think we are in this like adoption curve? Like, where are we at like now? Do you think we're at sort of in the bottom of in the beginning, or closer to like middle? Because a lot of people, they kind of speculate that it's kind of a bubble as well. That's what a lot of people say. But I think we're way early in the adoption curve. What do you think?
It's a really good question. I think every like 6 months, I'll be like, we're at the top of the bubble. We're at the top of the bubble, right? So I'm like, okay, 100x multiples or like, I don't know, 1000x. You're just like, what is going on? Or like the Anthropic secondary sales of people doing like buying SPVs of SPVs of SPVs. And you're just like, it just doesn't make sense, right? So I really don't know, to be really quite honest.
Yeah.
My kind of like thesis conviction is like, I think if interest rates go up, kind of as the way they're doing, like I guess there's two bottlenecks that I think are fundamentally coming, which is one, interest rates go up, which means the cost of capital increases, and so like the cost for purchasing like data centers and actually the free cash flow of them will decrease. Yeah, and you've kind of seen that price out in the markets in some perspective. Yeah, the other one being like grid constraints and energy being the bottleneck. Yeah, and if like those two sort of happen, then I don't think AI can continue to adopt it the way it's, and we're kind of already seeing that convergence with like, you know, the approach to AI has just been chuck more compute and it will scale and it's give more data and, you know, try and be a bit more efficient with it. But then like we're seeing that fracture in how models are developed. And so, and if those models do develop at that kind of rate, then actually maybe we're not, and maybe it is like a continual exponential curve, right? That's the benefit of AI is it's self-compounding and improving. So I don't really have an answer for it. Like, it's really confusing time as a VC. Please have some sympathy.
No, I mean, for us, I mean, again, I'm on the other end of the spectrum on this one, which is building this stuff for our customers. I mean, we were saying briefly before it started this podcast is at BoxDocs we're fully customer led, so we don't build stuff if it's not going to be used. So you know, we only build applications with AI for AI. You know, in our platform, if it's going to be used. If it's not, you know, if the operations manager is not getting any use out of it, it won't be built, and we won't spend time and money there. I think, you know, also for us, it's managing the cost. You know, at the end of the day, we have a cost of running our servers, you know, for our customer, and if that cost outweighs what the customers are paying for it or the benefit they're receiving, it's not worth it. So we are very, you know, we tentatively build for what we need to do for our customers, not just building stuff for the sake of it being cool.
That's cool.
And so I guess you're probably to question thinking about like, okay, enterprise adoption now, why are you betting on it is maybe an answer. And I think to your point, like these companies are like Goliaths. Like they are billion-dollar businesses, but the way that people invest them in the public market is you're my de-risking portfolio. You're my like, you know, lower return, but you're not going to drop down. You're like your beta is a lot less than, I don't know, typical tech stocks. Which is actually like really great as if you're a startup, because you take a really big bet, you raise a lot of money, you can displace them. And I think that's kind of what you saw with like Palantir, right? Like everyone thought like defense was a stupid bet to make because like, you know, it's well incumbent, but they're incredibly displacing them and incredibly profitable and cash flow generative. And there's been other, you know, tailwinds on that back end. So I think like startups in this place, like when you're incumbent, you know, by very nature is moving incredibly slowly. That is like really attractive for like, well, personally for me, right? And any investor when we think about markets.
Yeah, that's interesting. Yeah, in our field, because in our field as well, like a lot of companies, when the AI kind of came in and the hype was on sort of highs, a lot of companies, they started laying people off in sort of in bulk, even now it still happens. But then it kind of like bounces back. They realize that it's not really at the point yet, not really there.
Yeah, you saw in the news today, wasn't it? Meta's 8,000 people, but then you find other businesses are secretly not promoting the fact that they're actually hiring more people.
Exactly.
So the market's a bit of a funny.
Exactly, 100%.
But actually, what do you find, right? So like, you know, you outsource these devs into people's companies. Yeah. From your perspective as a founder yourself, what are you finding in terms of, are people just going, I just need AI for the sake of AI, or?
Yeah. So I think, in our case, so there are three major trends that I see. So one is that the benchmark for what developer can do now increased like a lot. If previously it was like separately, I don't know, backhand, front-end developer, now it's kind of like just get me one guy who can do the work. And that changed a lot the market, because a lot of people, they can't develop those skills quickly. So they kind of dropped off. Then the second thing, using AI tools for performance, that's a big thing as well, because on average, like we even introduced it like a couple months ago, like AI Fluent Tag on the platform for people who use like Claude, people who use like Cursor, like those tools for coding, because their expectations for delivery is like 2-3 times X from what it was before. So that changed a lot. But in terms of the Yeah, in terms of the companies hiring, I don't see it falling at all. Like I see it even increasing. It's just that the kind of the requirements are changing, like of
Okay.
who they hire. They mostly now try to hire based on the like industry experience. So if previously it was like, let's say, I don't know, just a developer, now it has to be a developer who worked with a specific product,
Okay.
with design kind of mindset, like a lot of things like that. Yeah.
Yeah.
So it's changing, but not in the way everyone expected. Like everyone expected like AI will replace developers, but
Yeah.
that's not
Yeah.
that's not happening yet.
As like the finance bro, like thinking, where do you think the arbitrage opportunity is? Because like feels like cost curves for developers is just decreasing.
Decreasing, yeah.
Right? Like the models are getting better, but there's people are they kind of caring more about creativity and indexing for that?
Yeah, I think creativity. There are a lot of requirements, like for instance, recently for on-site engineers. Like I was recently seeing the trend that clients, they want to hire people physically, even if it's contractors, they still want people to be physically in the
really?
office, physically,
wow.
in London, which is weird for me.
Yeah,
I
that's
think
weird.
yeah, but
That's full reversal.
yeah, exactly. But they still want that. And in terms of the cost, it's interesting because for the average devs, the cost went down, but for the kind of AI fluent, there's still this gap when they develop those skills, and the price for those who already developed it went up. So it's kind of like a bit weird. Like there's a huge increase that we see for solution architects recently, for
Okay.
data scientists as well. Like for those guys who are not really like an average development guy,
Yeah.
but for those who are specifically, on a kind of higher level skills. Yeah.
Interesting.
Pretty much, yeah. Okay, but we got to the really good point. I think you touched on this a little about the sovereignty of economy because of that. So yeah, there are a lot of concerns that people have, especially with US, building the data centers. And I've been reading that US has just stopped development of one large. OpenAI actually stopped the development of large data center in UK, and a lot of people are kind of concerned that because everyone is dependent on US-based kind of data centers and all the technologies, all the IP as well, there is a risk to lose this kind of economic sovereignty if you are not doing this locally. And the UK has also kind of responded to that with making like a British fund for AI startups and like kind of this stuff. So do you see it being actually a thing, or like what do you guys think?
I think like politics and markets just getting more and more intertwined. I think we're like in a period of stagflation, and like when you're in a period of stagflation, you need political intervention for it, and therefore policy will drive a lot more of markets. So I generally do believe that. As a result, I don't think we can rely on capital markets to solve the problem.
Yeah.
I think the point is like, is it US, or do we need to think about like Europe and about European data centers and that? And I mean that's kind of why we had Mistral, and I think that's the thesis for Mistral is. Yes, one being a kind of open source, and you can it's not a black box like OpenAI, but European sovereignty on foundational models. Because, I think something like the Cloud Act, like the Department of Defense or the Department of War, they can choose to just go through your cloud, and you have no right to that, right? Which is like hugely terrifying, and they don't need to give you a reason for it. So I think like particularly applications where we're seeing more fractures on geopolitical point, like defense, important supply chain pieces, maybe even healthcare records and the likes. Yeah, I think we fundamentally do need it, and even how we're thinking about how people interact with like China, right? On data centers, they don't want them to be there, or they want an API just connection simply. Yeah, I think that's first and foremost. But what about you? What are you seeing?
Yeah, well, from our customers' perspective, I mean, we're kind of like hand-tied, either from UK law or European law if we're working in the UK and Europe. So all of our data has to be kept either in the UK. We've got a couple of customers over in Italy, and again, we've had to set up individual servers over in Italy because it has to stay there. Everything from the geocoding of where scans are being made all the way up to all the data has to be sovereign to that country. And again, even from the AI model perspective, they don't want APIs being called out because they go, well, there's a link there. Everyone's scared of cybersecurity and everyone's scared of the data, like you say, data sovereignty. So everyone wants it in-house. Can I easily get hold of it if I need to get hold of it, rather than having to go to a different jurisdiction?
Interesting. And I think, especially in those industrial kind of like a supply chain, it's very data sensitive as well, right? So it's not like a B2C app, right? So
you've got customers' delivery codes, postcodes. It's also just commercial information. I mean, like, some of the biggest supermarkets in the UK would love to get hold of the data of someone else's supermarket. They would love to see that. And so, for them, it's about everyone gets their own server in their own jurisdiction. It's fine.
That's interesting. Yeah.
I mean, like, I've had people, I think, even like back end, like, well, I think the like Chinese models, God, I've forgotten their name, DeepSeek.
Yeah.
They were like using models, but they were like training off those models to build their own model.
Yes.
And I guess there's a point of, well, actually, could you be able to kind of, I don't want to say reverse engineer, but being able to kind of, by doing the relevant prompts, extract information from it to be able to do it. And so if it leaks into that point, I guess if I'm a competitor of yours, I would just want to spend time spamming that to collect the information. Or if I'm a criminal,
yes,
I have your financially sensitive information, I can exploit it that way. So like,
drivers' names, locations. Obviously, you know, if you're not turning your tracker off and it's taking you home, that's a real big problem.
Exactly. Exactly. I think what I'll see in our industry as well, because originally, like historically in our field, there are certain companies who are like in financial institutions and kind of those ones, defense as well, who are, when they come to contractors, they're very bound, but where the person is physically located.
Yes.
Like there are a lot of those who, you know, need to people to be present in the US or in the European Union with like all the like immigration documents being within the country as well. And I think it will also be reflected in what AI models they use at some point, because a lot of, I think if developers will use, let's say, I don't know, DeepSeek for a US client, they'll probably, it will cause some restrictions as well. Yeah. So I think that might be the case as well.
And I guess probably like the skill set development on the back end of that as well. Like if you've been vibe coding with a certain model, or that model's connectors on that, like it's probably maybe could be irrelevant for certain sectors or certain industries on the back end.
Yeah, totally, 100%. And what do you guys see about the investment climate in this field? Because I think, in our case, it changed a lot. I'll touch upon on this in a second, but in our case, it's changed a lot the work capital flows. So I wanted to ask you guys, what do you see happening on the investment market because of that whole industrial change?
Yeah, I mean, I'll bang on about this for like Kingdom Come, but I don't know if you want to get started.
I mean, the thing is, my role in the business. I mean, Alessandro, my co-founder, he's got a lot of the relationships with our investors, and actually, we've not needed to raise for quite a while. Yeah. So we're a little bit out of that loop. I mean, in terms of our experience, we've actually not raised during kind of the inception and adoption of AI yet. Okay. So we've not needed to because we've just purely focused on revenue and profit, right? And just like properly bootstrap the business manually.
It's the right way to build a business.
It's the right way.
Nice and slow. But no, so we're not fully into that. I can't respond to it fully and properly. But we are in a bit of a weird niche space. Supply chain and logistics. It's not that sexy. But the more that it's spoken about in the news, the more it's spoken about, like you say, with the world of defense and things becoming more geopolitically, aligned to nation states, it has become far more of a hot topic. And you are seeing more people getting involved in this space, which for us is lovely because actually it stimulates more of a conversation with our clients.
Yeah. Nice. Yeah.
I'll go on my 10-minute rant on what I think about it. So. Yeah, as I talked about, like the need for sort of sovereignty, the need for like the geopolitical fracture, like why we're seeing ARIA, we're seeing Sovereign AI Fund, that Industrials Fund, I think, come into fruition, which I think is like really great because I think there's more and more case studies of people showing like if you get through the kind of capital valley of death, you can build something really quite phenomenal on the back end. And if there's capital flowing into that space, like you can produce like really huge outcomes where I think investors are particularly worried about like defensibility, right? Yeah. So many AI founders and like maybe you've got it or maybe your clients have it, which is like, but why can't this customer build it in-house or why can't Microsoft do this? And it's really frustrating to kind of think about that. Yeah. And so when we're thinking about this sort of space, I think that there's needs for, I guess, greater moats and defensibility. When we're thinking about that kind of this sort of industrial AI space, I think we're seeing more government intervention into it, which is flowing more money in, which is driving more policy decision and having to create capital markets. And then, second bit, that's allowed to kind of go from the valley of death and build really phenomenal businesses, which to the point where these sectors I'll be probably quite transparent, like have benefited from slow moving innovation. Like they'll be going to, the McKinseys, the Deloittes of this world, or even other kind of consultancy providers have been like, because it's been relationship driven, I've just been like, okay, it's going to cost me like 10 billion. When you've now got a startup, you go, I can do it for 500 million or 500k, and like hugely displacing and disrupting it, and they just can't move, I think, as quickly. I think, and like that time to R&D and that time to product value, for particular sectors like material science or pharmaceuticals and therapeutics, it's speeding up. And like, I guess the thing in venture is like, could it speed up enough quickly for two kind of displaced companies within a 5 to 7 year window.
Yeah.
But I think it's counter to that. Like when you start a business, you probably have competitors who are like in probably your pre-seed, and like well, like they're far too behind me. Can they actually catch up with me?
Yeah.
Yeah.
And it's kind of like, oh shit, I need to kind of be a bit more on my like, toes here. Yeah, a bit more prepared for it. But like, I think, from my perspective, it's everyone's a deep tech investor now.
Yeah, exactly.
Right in this space. And so like there's more money in it, which is great for me, and I think can kind of solve that problem. I think what I'm really mindful of is a lot of money going into like robotics.
Yeah.
And like we're seeing that, and it's kind of like that physical AI point that we've kind of been touching on to build these models, because I think that's maybe the next labor arbitrage.
Yeah.
I'm still a bit mindful of it because like even as an investor, you've got to think about where's the point of commercialization and is the tech ready for it?
Yeah.
And like, I don't know if you've seen some of the robots, but like they are pretty cool.
Yeah.
Have you seen the humanoid company?
Yeah.
Yeah, this one.
Well,
Cool.
there was one, there was a humanoid company out in the Silicon Valley that had apparently like a contract with BMW to do some parts. It was like humanoid, but they'd actually only been working for 6 months.
Okay.
And actually they needed charging every like 8 hours.
Yeah.
Okay.
And so it wasn't actually more effective than using humans. And so they just swapped back.
Okay.
I think there's going to be really interesting use cases for robotics. We're seeing it in supply chain.
Yeah. There's tons
like
of it.
factory floors, probably seeing in agriculture and other aspects for it. But like general intelligence pieces, I think is probably going to be a bit of a bottleneck until like AI catches up with that.
Yeah.
But like honestly, like defense tech, I think as a space is like super bullish on.
Yeah.
I mean, it's why we did, I guess I can shout out, we did investment in Shield Space, which is like a defense tech company. And it's using like machine learning models in a really unique way in an application for it. But I think where companies win is to probably what we've sort of been discussing is like sector expertise matters so much in this. Like build great products to like be able to use the model like really effectively.
Yeah.
Yeah.
And then also having the networks to understand how you can win in a distribution perspective, user experience perspective, or even data ability, right? If you can get access to other data sets that people can't get hold of, or your models built in a way that allows you to improve your model, that allows you to have that runaway effect from other companies. So really, really, really bullish on this space, and I think there's going to be some interesting science innovation on the back end.
That's cool. Yeah, I totally agree. I can share like our experience in terms of like what we see as well happening in our field. It's pretty interesting because historically we've always seen the response from VCs in general, like from angels, from all the investors, that you guys are building something that is obviously tech enabled, but you guys are building a service. Still, it's not a SaaS. And I think what's happening now is very healthy to the market, because I think the area of like just SaaS products, it's kind of been a bit overhyped. There are a lot of it created a lot of products that people are not really using, and the investors were kind of fine with that. and I think now we're at an interesting space when the more tangible, like the more physical, the more value-adding products are getting funded, and we see it a lot in our industry because, again, like historically, people were always like, "Oh, you're building something in a service, like there is no point with putting VC money into it." But now, what started happening in our industry is, I don't know if you've heard of that. It's called AI-enabled roll-ups. It's
so interesting.
So interesting topic. Because essentially, people figured how to actually improve the services businesses with AI, and they just invest like so much money in that.
What's like the free cash flows are basically like software businesses.
Exactly.
And like the service market is like dwarfs the software market.
Yeah.
Exactly.
Like, hugely. And I think the other bit is where people thought that service businesses couldn't scale quickly.
Yeah, exactly.
I guess the software businesses,
Yeah,
you build
yeah.
it, you go on like one of those hyperscaler platforms and then blitz scale it and grow quickly.
Yeah, exactly.
Some of these service businesses roll-ups are like growing like crazy. Albeit some bit being inorganic.
Yeah.
But like you kind of can get to a massive scale where they just like grow phenomenally well.
Yeah.
Where are you, I guess from your perspective, where are you seeing that kind of big roll-up opportunities for it?
So I think there are three areas that will be probably affected the most. So one, real estate for sure. I don't know. Have you heard, guys, of the company called Della? I don't know. You know this guy?
Whole business, beginning back them.
Exactly. These guys are like going crazy. They fundraised, I think, like 93 mil a couple months ago. It's like from General Catalyst. It's just crazy. And I think real estate, definitely accounting. I think accounting is a big thing. Our accountants that we use, it is a roll-up. So they created like AI products and started just buying accounting firms. So I think accounting and recruitment. I think recruitment space is like traditionally super thin margins,
Yeah.
a lot of like customer relations,
Lots of manual work.
manual work, a lot of like admin overheads, like so much automatable, like kind of AI stuff.
Yeah.
So
I mean,
I think those three.
if I ever raise my own fund one day, I'd probably be a bit too late now, but like, well, I think it's that view is like, I would love to kind of buy service businesses. Like, there's so much in the UK, and then actually like bring in like a CTO and AI operator,
Yeah.
and just, okay, how can we strip this and
Yeah,
actually improve
yeah.
the EBITDA margin of like all these businesses,
Yeah.
and then like flip them and sell them to someone else, or they're cash flow generative and they just pay me dividends for like, phenomenally well.
Yeah, exactly. And I think like the cool thing about service business is not many people, because there is not enough hype there yet, and not a lot of people kind of try to get into it. Because for instance, in our like in kind of staffing field, about half of the UK, I might be not sure about the number, but about half of the UK employment comes from temporary workers. Like half of it is kind of in-house employment, half is temporary.
Yeah.
And people don't really, when you just live your daily life, you don't really think about it, that it happens so much. And the potential for like improvement there is like enormous. So
I think this is probably where like UK, I think people talk about like market sizes and TAMs and like how do you sell into like big enough markets in the UK. I guess we were sort of talking about this as well, right? Like, logistics is a phenomenal space because like you get it right, the TAM in the UK is like enormous, and you can make a lot of money. And like that's probably sort of the problem with sometimes I think UK venture is when there's probably frankly it's not enough unicorns chasing capital in this business, and it gets very concentrated, and but actually there's UK mid-market private equity is actually doing like pretty phenomenally well on like a global stage.
True.
And actually like to that point of if we could use a lot more AI in that that market, or even just baby private equity, you could be making quite consistently like 3-4x returns, maybe even more for your fund as a point in time, which achieves sort of venture returns, but also capable of doing it because you've got enough deal flow to make it happen.
Yeah, exactly. Because I was also thinking, in terms of the products. You guys know Lovable, of course. I think you know that it's like 100,000, I think 100 or 200,000 products being released every day on Lovable. And I was thinking about it. Wow. Imagine how much like the benchmark for some MVPs and products felt like it went down so much. And obviously, if you're an investor, you'll probably receive like 20 times more like offers for SaaS products that are easily like doable. And I think that's also like that will kind of bring capital from traditional products to something more specific, industry kind of focused and stuff like that.
I mean, like the M&A, I think was it SaaS multiples, buying it three times.
Yeah.
Three times revenue, which is like
ouch.
Brutal, right? Sorry, I didn't want to hear that. No, I said that. But to a point, if you're a service business, you're paying 1 times, and actually like, don't be wrong, 2 times ton of additional money is great. But but before it was like 8 times usually was a rule of thumb, and actually it's been kind of squashed a lot more. For it, and if you're growing quickly as a service business, maybe you're 3 times. And actually like, it's probably more what like enterprises customers want. They don't really care, and they're happy to outsource in kind of consultancy sort of space. So I think it's a super interesting space for sure, and like we're looking at it a lot more within our funds and how we can go about that.
That's cool. Do you see the UK as being kind of on the same, because in the US it's kind of big thing already? Do you see the UK kind of on the same level of interest as the US, or a little bit behind?
We're never on the same interest as the US. It's always smaller. I think it's like catching on. I think there's like ripples being had and like discussed about it. I don't think we're not seeing like MBA grads from like Cambridge or Oxford or LBS going like, I'm not going to do IB or private equity. I'm going to like buy service businesses and flip it as they are in the US. Which I think is a bit of a shame. But like I think there are like flutters of it happening for sure, and I think it's gaining more and more momentum. Like so many more and more funds are having a roll-up strategy or dipping their toe in it, because to your point, I just think there's so many more deals to be had. It's such a blue ocean market,
especially for us. We're in conversation with a few people. There's in our space in logistics, a lot of traditional businesses that sell software in our space have been around for so long. And the tech, they're usually family founded. It usually was an ex worker within a warehouse found a problem, developed a bit of software for it, and grew it organically. but they've never grown out of that point. That they get a nice bit of revenue and they live off it.
Yeah.
And so from us, actually, there's quite a few businesses that we're looking at going, oh, that could be quite interesting, just to tap into that market and increase the product offering elsewhere. And it's an easier way to get to market with other parts of the supply chain.
Yeah, that's pretty cool.
Yeah,
nice. Yeah.
No, I was gonna say, like, I suspect there will be a lot more consolidation. To your point of view.
Exactly.
And like, I think we should probably be a bit more. We should lead more into inorganic growth in venture, because I think we see like you can't do that. That's like a cheating way for it to happen.
Yeah.
But like it, I think it's ultimately there's so many people to your point are like 60, they want to retire.
Correct.
Exactly. They just want to be bought off and like buy it super cheap. And as you as an entrepreneur or businessman, like
we can flip it and do something else with it.
Buy it. I get the contracts, get the IP.
Exactly.
And then I can grow a lot more quickly. And then actually on exits, there are therefore maybe a bigger buying pool for people who can actually buy your software. If you want to sell it, maybe you want to be pass it down to your kids at some point.
Hand my kids the code base.
On their 21st birthday.
Here's the GitHub password. No, I mean that's it in our space. There are tons of really attractive businesses from a growth perspective, and we've got some great advisors on board who come from the world of payments and accountancy, who have grown and bought businesses from a commercial perspective, not from a developer's product perspective. And it is for us on our pipeline of actually, why do we need to build this when we could just buy this and enter the market that way? Exactly. And if we can put the financing behind it, this is a really great opportunity to grow. There are a few different businesses that we're looking at in the UK, thinking this could be a potential for us, and like you say, to consolidate and expand the market. Again, in logistics, the vast majority of customers, they actually all do the same thing. So a lot of our companies that we work with, we go to them and we have these kind of initial couple of meetings in person. Walk around their warehouse, understand what their drivers are doing, understand the little nuances. And we usually then go back to the meeting. They say, what we do here is it's really novel. It's really different. And I go, well, you are just moving either a pallet, a roller cage, or a bread basket from A to B, right? You might use a third-party driver, but it's still a driver, right? Yeah. And so there are loads of companies out there pitching themselves as being different, but actually for us, what's great about building products in our space is like, you're all doing the same thing, but you're all trying to tackle it in a different way. Some of you tried to build IT internally, it hasn't worked. Some of you have tried to outsource it completely, it's not worked either. And actually, here's a built product, and if we can consolidate that market for one solution, in our space, given that the trust is also a massive value piece for our customers, given their size, why not?
Of course, to your point, they probably just want like a much more simpler tech stack to manage, right? And vendor.
Yeah, exactly. I mean, one of the biggest savings. So, in our business, a lot, the initial saving is the reduction of assets, right? Yeah. So you're not having that massive churn every year on your balance sheet of having to replenish stock. Then there's obviously the products inside, the manual handling, the accounts team who have to go and purchase this stuff and the shipments. But to your point, one of the companies we're currently working with, they're a high street retailer. You've seen them; they're not public yet, but you've seen them all around. And we're speaking to the head of logistics. He said, we're looking to build a bit of a tech internally. We've hired 3 people. We can actually lay them off because we've got you. Nice. So immediately you've made a 300 grand saving on a bit of software that you've not even deployed yet, because we can do what you're trying to do. And so actually, for a lot of these businesses, as I was saying before, you are a logistics business first, right? You are really good at getting things from A to B efficiently. You're not a tech company. And so why do you need an IT team? I get it for your internal systems, Word, Excel, fine. But in terms of building stuff, you don't need it. And so, for us, the savings can also come from that, just the headcount perspective.
Yeah, that's really cool. That's pretty cool. I love it. Guys, I think that's about a good wrap up for the episode. Thanks so much for coming. I'll definitely leave all the links to your social media and social media accounts in the description. And it was lovely to chat. I really like how we kind of touched.
Thanks for having us. It's a really nice studio.
Yeah, thank you.
Thanks so much, guys.